Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 29th of November, and we finished out a strong month for the markets. Only oil lost ground this month. Look at those numbers for Bitcoin and Ethereum. What a great November it was for them. Financials up 10%, the Russell 2000 up 11%. Just some big numbers across the board. So let's take a look here and start out with the S&P 500. Daily chart is on the left, the 30-minute time frame on the right, and this black line, of course, is our rising 5-day moving average. We use the 5-day moving average only on an intraday basis, and especially on a holiday week, where today we saw, the market close at 1 p.m. Eastern, 3 hours early. So today's 5-day moving average is 3.5 hours. Of today, plus 6.5 hours of the last 4 days, and then a little bit of the sixth day. So in other words, we're looking at 5 true full trading days, and the only way to do that is on an intraday time frame. Anyways, enough of that. We are, as I said, at a new all-time high for the S&P 500. The market found support right where it was supposed to at that prior band of resistance in the rising 20-day moving average, and it continues to make a pattern of higher highs and higher lows above the rising 5-day moving average. I don't do price targets. The price target when we're at an all-time high is simply higher. Our job, our focus is to manage risk. So whatever your time frame is, if you're trading off the 30-minute time frame, I would say is yes, your stop goes underneath one of these higher lows, because it's when the pattern of higher highs and higher lows breaks that the trend for that time frame is broken. It doesn't mean you're going to get an immediate reversal, but it means that the momentum is stalled, and there's no sign of that now here, obviously, in the S&P 500, but that's what it means. Let's take a look actually quickly at the S&P on the left. On the right is the Qs, the semiconductors, and the Russell 2000. Semis have been the weakest lately, and you can see today they finally got back above that 5-day moving average. They are, however, below the anchor from the election. That's the orange line, and that's been giving this group trouble. So I'm not ready to say the buyers are back in control yet, but it is pretty impressive that we saw such a good recovery this week for the semiconductors. The NASDAQ, we dipped briefly below the month-to-date anchor. It's been a little bit choppier in here, but still holding above this prior band of resistance for the NASDAQ, and as long as it does that, it's innocent until proven guilty. The most important higher lows to measure risk against are right here if you're an intermediate term trader, and below this level if you're a little bit longer term focused. What I'd like to see next week, market doesn't care what I want, but I'd like to see it come back down, test that anchor from the election, show that we have buyers there as well as with the 5-day moving average. Then I think you're going to see the NASDAQ quickly at all-time highs as well. The Russell 2000, and here's a great example of what I was just talking about. We saw the pattern of higher highs and higher lows broken, and it didn't lead to an immediate reversal, and we don't expect it to, especially when the market is above the rising 5-day moving average. So instead, we look at it and say, hey, maybe this market just needs a little bit of time to digest these gains, and perhaps it's going to distribute and turn lower, or when we have a primary trend higher, maybe it's going to continue to move higher. So just know where your risk is. Bottom line is, I think this is the most important level for the Russell 2000 right now. That is below the low that we saw this week. If we break back below that, then maybe we're going to see a little bit deeper correction. But for now, it's innocent until proven guilty. It's choppy. I don't have a position in it. And as I always say, it doesn't matter what I do with my money. It's about what you feel comfortable with trading your own money with. The semiconductors, as we noted, they did get a bounce in here. And they bounced from the rising 200-day moving average. That's been an important level for it all year. We saw that we were extended from that 200-day moving average at the beginning of the year, but the first test of it in August was bought, as well as the test in September, and now it looks like the November test has been purchased as well. A couple little reasons for concern here. Monday, we will see the 5-day moving average decline as we get rid of this data, unless the market rallies up there. But if the market does rally up there, we're going to run into the anchor from the election. That's the orange one. From the recent high, that's the red one, and the beginning of November. So to me, I think I'd love to see it rally up there, then come down, create a higher low. That 5-day moving average will start to rise, and then maybe it's back on for the semiconductors. It does still concern me just a little bit that we have a declining 20 and 50-day moving average. But if it could set up like this on the right, on the 30-minute time frame, to me, that's what's more important, and that's how I think that we could look to make some money on that. The shares, not shares of, but Bitcoin is holding above its rising 20-day moving average. We saw the pullback to this anchor. As I mentioned a couple times in Twitter, I had purchased a 5% piece here, 5% of my full exposure. I purchased another 5% there, bring it to 30%, and then I sold half of what I purchased here. So I now have a 25% position. I've lowered my cost basis, and I'm still holding Ethereum, which I purchased over here a couple weeks ago. Haven't touched that. Have no intention of touching that. So that's the crypto update portion of this. The biotech stocks, big week, and I did a little bit of reading, and the market initially was freaked out because of Kennedy, and now we've got a new FDA appointment, it appears, and the market is happy with him. So that's where this volatility is coming from, and what I'd like to see is maybe some pullback and then create a higher low and perhaps get going. But this might have been just a massive shakeout and overreaction to a cabinet appointment, and if that's the case, well then we had a failed move to the upside, we had a failed move to the downside, and this could hopefully pave the way for higher prices. I'd still like to see it settle down a little bit before getting involved in that. Financial stocks, another new all-time high, and same story here. Raise your stop up to underneath the level that makes sense for you. Price targets are useless. Your price target, over here might have been 44 or 45 or 47 or 48 and capped right through that. The goal is to ride these trends as long as we can for the time frame we're engaged. Now, if you're a longer-term investor, maybe your stop goes underneath the most recent higher low at the rising 50-day moving average. That would put you way down at 46. But the thing is, that's 10% away. It also might mean that you survive a shakeout like this, and then it rallies up to $60. That's where you have to reconcile what your time frame is. The time frame I'm comfortable with is the intermediate term time frame, which is why I talk about the 30-minute all the time. Bonds got some rally in here. I'd be a little bit careful about chasing bonds right now. They rallied right up to the declining 50-day moving average. That's this line. This blue line in here is the year-to-date anchor, and that thin black line in there is the 200-day moving average. So where has it come from? It's just rallied from 89.5 right up to 94. That's a pretty good little percentage move for the bonds. If you're looking to buy bonds, I think the better scenario is maybe it starts to pull back a little bit and then does something like this, and then perhaps the bonds could be in a better position for a little bit more of a sustained rally to the upside. Energy names, as we know, they broke out and got a little bit extended. They broke out at the after the election, and there's the gap from the election. And of course, we put an anchor on that because it was a huge catalyst in the market. The market is finding buyers there like we wanted it to. It might even dip down a little bit further, so I'm not ready to say it's a buy yet. But if we were to dip down like into here and shake people out and then come back up, and then in a couple days, as we get rid of this data up in here to replace that with the 5-day moving average, the 5-day moving average will flatten out, and that could set up these financials for a nice low risk upside play. And I might even trade the XLE, even though I don't trade energy names. So hopefully I don't jinx it for you guys, because I just generally don't make money in energy names, and here I am tempted to do it. So I'll keep you posted on that. But while I have you here, it is, of course, Black Friday for everyone who sells something. An Alpha Trend subscription is not immune to these, so we have a sale as well, and it includes daily analysis like this at the end of the day. Usually about 4:15 p.m. Eastern, I do a video that goes through the major ETFs and occasionally a stock like Tesla and Nvidia and that sort of thing, and then about an hour later, I do a video which shows the stock picks, such as Affirm, which we're long at $58.60 per share. That's Alpha Trend subscribers. Bros at $48.55. HAYW, that's another open position. We're long that. It's not really doing anything. We're long at $16.10. And RNG, which we have a 1/3 position left in here, and hopefully we'll reestablish that, a better one. But the point is, it goes through the exact reasons for looking at these stocks, and it's always, it's never about trading every stock that moves, catching every name, or always being in the most popular names. It's about finding the low risk, high probability trades and explaining the reason that goes into them, and then managing risk. And that's something I take super seriously. So by the time that video's done, it's about 5 p.m. Eastern time, and you've got plenty of time to learn and review that. I've got a Discord room, so if you have a question about the setup, I can answer that in the Discord room, as well as questions about individual stocks. So that's part of the Alpha Trend subscription, and at 11 a.m. Eastern each day, I do another brief video that quickly goes through the major ETFs and then follows up on all those stocks like Affirm, Bros, and other open positions, and says, here's where our stop goes now. Or it might say, here's why we didn't buy that other stock. So that's the main focus, is, on a daily basis. There's also 2 educational webinars each month that are an hour long. The focus there is education, and for you to get all of your questions personally answered, not about individual stocks, but about concepts. We do talk about individual stocks that you want to talk about as well, but the focus is, let's learn. Let's ask the questions that, why do we use the 5-day moving average only on an intraday basis? What are these pivot levels and that sort of thing? Things that everyone can benefit from, rather than just 1 or 2 stocks you might be interested in. When you sign up for this Black Friday sale, you also get a half-hour one-on-one with me. That's scheduled at your convenience. We do a screen share. We talk about stocks. We talk about concepts, whatever you want in that. That's your 30 minutes one-on-one with me. I've also got a couple of trading courses that you have access to. So that's all for $998 for 1 year. And normally it's worth about $2,400. So it is a significant savings. If you're still listening, maybe you take a look at that. If you have any questions about how to access it, that sort of thing, it should be obvious on the website. If not, contact support at the bottom of the page of alphatrends.net. Thanks, and have a good weekend.